What is going on, investors? Hope you guys are doing well out there. Time to take another look at Intel Corporation. It's that time of year again. Intel Corporation, ticker symbol INTC. And we've done numerous videos here on the channel as it pertains to Intel. And constantly, I have to put up with the comment section of the Intel bulls, the people that have been holding this stock for over the last year and have seen it gone up. Shares of Intel, believe it or not, over the past year are up about 10%. But you have to put that in context that you could have had shares of Advanced Micro Devices or AMD, shares of that company are up 88%. If you look at Nvidia, shares of the AI chipmaker are up 232%. And forget individual stocks. What if you had just bought a basket of the semiconductor industry, a basket of semiconductor stocks in the semiconductor iShares ETF, the SOXX? Well, you'd be up 62%. So yes, over the past year, Intel has actually performed okay. But compared to its peers and the benchmark, it is drastically underperforming. But has that changed? As the company just announced their Q1 earnings, have things finally changed with Intel? Will the bulls that constantly get in my comments and say, I don't understand Intel, I don't understand the semiconductor industry, I don't understand how Meteor Lake or Raptor Lake are going to change this company's financial future, will they finally be right? And will I finally be proven wrong? We'll have to go through these financials and we'll see. And then we'll look at this from a technical perspective as well. Have we found an area of support where it actually might make a little sense to take a shot at Intel? We'll talk about that and more on today's show. Guys, over the past year, shares of Intel are up 9.89%. That's after the company reported their earnings yesterday, and we're seeing a dramatic drop, about 9%. Look, over the past 5 years, this thing has stunk. It's down 39%, and believe it or not, over 24 years ago, you could have bought shares of Intel for the exact same price that you could have today. Many of you weren't even out of mommy and daddy's house 24 years ago, and maybe I was just slightly out of the house too. So that has how far Intel has come, and really, it hasn't gone anywhere. And again, you could have invested in broader semiconductor industry and be up huge, but have times changed? Is the Q1 a turning point for Intel? Are we about to have the rebirth of one of the world's greatest companies? We got to take a look at this. $12.7 billion worth of revenue for Intel. That was an increase of 8.5% year over year, but it missed expectations by about $80 million. How are you a semiconductor stock right now and missing expectations? That's really bad. Even worse than that is their second quarter guidance. Revenue expected to be between $12.5 billion up to nearly $13.5 billion. The problem is the consensus estimate before today was for $13.59 billion. So on the low end, we might miss expectations by $1 billion. Even on the high end, we're coming underneath Wall Street expectations, which again, for the high end estimate for the Q2 was at 14.3. Low end was for 12.4. These are 32 very well paid analysts, certainly probably make more money than I do. They were anticipating 5% growth. We might come underneath that for the second quarter. And in fact, you have to presume that with Intel, because this is a company that constantly promises something and then under delivers. It's not like Nvidia where they promise something and they way over deliver. Intel is actually the opposite. They missed on their revenue projections this quarter. They're going to miss in the second quarter as well. And that is just a disaster for the stock, particularly when you have alternatives to invest in, not just broad-based ETFs, but you have AMD, Nvidia, and many others, Broadcom, TSM, ASML, in this sector that you could be investing in. Brings into question all the future quarters with Intel when you start looking out into subsequent quarters where you're still projected low single-digit growth to grow to mid-teens growth by calendar year 2025. We have to wonder, is that actually going to happen with Intel. Now, we come over to these financials. We do see that net revenue over the last year, it did grow 8.5% on that top side. We did miss expectations, but just by a little bit. You grew that top side revenue by about $1 billion from 11.7 up to 12.7. You also expanded margins, which is a good sign for Intel, but in the semiconductor industry, when you look at the margins of Nvidia and certainly AMD next week, everybody's expanding margins from 7.7 on the cost side down to 7.5. So despite higher revenue, you had lower cost. That's margin expansion. That's going to give you higher gross margins. So $4 billion last year up to 5.2. That is great news. If you're an Intel bull, this is great news. We'll get to the nitty gritty of it here in a moment, and I'll give you some strategy that I think AMD is going to have to play in the coming months. We'll see if they employ the strategy or not, but we still have other costs at Intel. Operating costs of research and development went from 4.1 up to $4.4 billion. So this $5.2 billion of gross profit, almost all of it goes away on research and marketing spend. Now, we also have marketing, general administrative spend. So despite the higher revenue, unlike Google, which were able to drive down their marketing spend, drive up revenues, Intel, like most companies, okay, this is not what Google did was extraordinary. What Intel does is more traditional, where you had to grow your marketing spend to get the higher revenue. So from 1.3 up to 1.6. So we're already in the red there. Now we have restructuring and other charges, and this company is constantly firing and laying off kind of the lower end worker. What comes to mind as we go through these results is, when is a top executive at Intel going to pay the price? I know they've let go a few of them, but when is the CEO's job at risk? When, again, you have broadly underperformed the benchmark. Forget AMD and Nvidia. The benchmark is a broad-based ETF, and you've underperformed it by about 50%. And if you look over the past 20 years, you've underperformed by thousands of percent. When is one of the top brass at Intel going to lose its job? Because here's your operating loss. It was nearly a little over $1 billion. It was $1.5 billion last year. If you strip out the restructuring charge, it's not bad. We lost like $650 million or $750 million. It's not bad. Now, the other thing that this company does, we'll give them credit, they actually make pretty good equity investments, unlike Amazon, which invested at Rivian at the top, and there's many other examples out there. These companies tend to not do very well on their equity investments. This is investing in other companies. Intel has actually done a pretty good job. They invested in Mobileye and successfully kind of spun that out, gained some profit on that. There was another company that just more recently went public. Off the top of my head, I can't remember it. I don't think these financials include that in there, but you have some gains on the equity investment. So when you pull all the way down to a net income, it's just $437 million. Last year was $2.8 billion. Dramatic improvement on the net income side. It was improved a little bit by this equity investment. You also have interest that they benefited from. Didn't look like they have to service a lot of debt in the most recent quarter. If you strip out these restructuring charges, you're basically at a break even from a net income perspective for Intel. So it's not that bad, but that's not the full story. You have to come down to the balance sheet and say, how much runway did this company have? They got a slightly over $20 billion in cash last year, in December. They had nearly $25 billion worth of cash. Long-term debt, unfortunately, balance it out to the tune of $48 billion. Short-term debt is $4.6 billion. So this is a company that still has some cash needs, and as long as Jerome Powell keeps those interest rates higher for longer, that's not good for companies like Intel. Now, we talked about how the operating statement wasn't bad. It printed a net income number that is negative, but if you strip out things like restructuring charges, which aren't reoccurring, you'd have to factor in that equity investments also likely not recurring. It's almost break even, okay? It's not bad, but when you come down here to cash flows, paints a slightly different story. You pull down a cash and cash equivalent number. More importantly, you pull down a net income number of $437 million loss. Last year was $2.8 billion. You add things back in like depreciation, stock-based compensation. How did this stock-based compensation over the last year go up? Based on the performance of not beating the benchmark, which is a broad-based semiconductor ETF. You can't compare this to the S&P 500. You can't compare it to the NASDAQ. Compare it to its peers. It's actually down over 50% compared to its peers, but yet the executives at Intel went from $739 million in stock-based compensation up to nearly $1.2 billion. When are the bulls, instead of attacking me in the comments of my videos, actually going to hold the feet to the fire of these executives? This is offensive. This should be offensive to you if you have any interest or you own shares of Intel. You come down here to your net cash provided by your operating activities, you're still losing money. You're still paying money. Money is still leaving the building just to operate this company. Last year, you spent $1.8 billion operating the company. This year, $1.2. Doesn't paint the full story. Believe it or not, folks, it actually gets worse. This company is trying to convince investors it's going to be a fabricator. Some people believe the federal government is going to foot most of that bill. That is not true. This company is going to have to come out of their pocket to build out some of their fabs, especially if they want to get on par or equal with Taiwan Semiconductor, which spends twice as much as this on a quarterly basis. They spent $5.9 billion. Last year, they spent $7.4 billion on property, plant, and equipment. The problem is when you bleed operating cash flows to the tune of $1.2 billion. This is negative. Now you're going to spend another $5.9 billion on property, plant, and equipment. You are big time in the negative. Now you're still servicing long-term debt to the tune of 2.5 in the most recent quarter. Last year, it was closer to 11 billion. So you took on $11 billion of debt last year, now 2.5, and you look at your cash and cash equivalents, it's still going down because you continue to bleed money operating the business and reinvesting for the, quote, future. Now, what does the future hold for Intel? Right now, the business is still all about desktop PC, notebook PC, and other PCs in the personal and client computing group. Over the last year, let's give this company credit. They've had fantastic results from 1.9 last year up to 2.5 billion on the desktop. On notebook, you went from 3.4 to 4.7. We've absolutely seen a trough in PC chip demand. These are spectacular numbers. Take a look at your total revenues from 5.8 billion all the way to $7.6 billion. So before we get to the rest of the results, I'm going to show you this is a wildly profitable business as well. Here's your segment operating income, which is more or less your profit. Here's your client computing group. So that's what we just went through: the desktop, the notebook, and the other, basically personal computers, off of $7.5 billion in revenue. $2.6 billion in profit compared to $1.2 billion last year. Really, really strong margins, strong profits from the company's bread and butter business. So that's the good news. The bad news is AMD could wake up and say, pull a Jeff Bezos and say, your margin is our opportunity. So AMD, I think what AMD should do, and we'll see if the AMD decides to talk about this on the quarterly conference call next week, is will AMD cut their prices, sacrifice margins, sacrifice profits to squeeze the neck of Intel? Because that's what they can do. Because here's the deal, guys. You start to look at Intel's other business, data center and AI. That's all you hear about. Data center and AI is super hot. It's the thing. Well, wait, what happened to Intel? 2.9 billion up to 3 billion. We stayed flat on the data center when every other company is growing their data center spend. Like Google and Microsoft and Meta expanded their data center spend like 40-50% over the last year. What happened to Intel? Oh, it was flat because they don't have a product there. They don't have a good product. And come down here to operating profit, we'll give them credit. They went from basically making no money last year up to $482 million. $482 million to you and we ballin', folks. Okay, but to a company still worth over $140 billion, that's absolutely nothing. And so they're still making nothing on the data center, and we're also seeing no growth on the revenue side. That's not good. Now, it actually gets even worse, because everybody's saying that Intel's going to turn into a foundry. They're going to manufacture chips. Jensen Huang of Nvidia is going to call Intel up and say, hey, buddy, I want you to make my next H100 chip. Or Tim Cook's going to call up Intel and say, well, instead of using TSM, we're going to use our buddies in Intel, and they're going to create this foundry. We'll look over the last year, folks. 4.8 billion down to 4.4 billion. Does that look like a promising business or one that is fledgling? Now, I understand it's still ramping up. It's still scaling up. They've got a lot of things in the work, but come down here to Intel Foundry right here, folks. Look at the money you lost last year on higher revenue. on $4.8 billion, we lost $2.4 billion. This year on lower revenue, $4.4 billion, so about $500 million less, we actually lost even more money on the foundry, nearly $2.5 billion. So the revenues are decelerating, the losses are accelerating. Anybody believes that this company can successfully build up a foundry business to compete with the likes of TSM and maybe to a lesser degree the Samsungs of the world. I want to know what you're smoking because it's probably illegal. Every dollar that this company makes in their promising business of client computing, it ends up going away in the foundry business that they're trying to scale up and reinvest in. When will that turn around? I don't think it's going to turn around anytime soon. And like I said, AMD could put the curb stomp on Intel if they cut their prices and they call up Dell, Lenovo, and the other PC makers and say, screw Intel, we're going to give you these chips basically for free. Forget paying Intel this margin. Come and buy the chips from us. And that would destroy Intel probably for good. Now, from a technical perspective, folks, considering you could have bought shares at the exact same price over 24 years ago. I was a young guy 24 years ago, just beginning my career in finance and in college. You could have bought shares of Intel for the exact same price. That is a problem. So you've got to trade this one. If you want to be in this one, you don't make anything holding it. Yeah, you get a small dividend yield, but you might as well buy treasuries or put your money in a money market fund. Over the past 5 years, you've lost money. Over the past 10 years, yeah, you're up 20%, but that's basically lost money. Even a max chart of this one, even if you bought it on its IPO day back in 1994, I say only, but you'd only be up 734%. Pull up charts of any other semiconductor stock that's been around since the 90s. It's slightly more impressive than that. So you got to trade this one. From a technical perspective, I mean, I've got a million lines on here. We should probably clean this up maybe a little bit. But in the shorter term, we have to ignore the past with Intel. In the shorter term, you're still making higher highs. You're making higher lows. There could be some footing. I know I'm on a weekly chart. We could change this to a daily chart. Then you get this big red candle. Those are scary. That's fake. Take that off. Get this big gap in the chart. But if this level holds with Intel, I certainly could see the argument. From a trade perspective, okay, I know a lot of people say, this is the investor channel. You can't trade. That's like telling Bo Jackson just because he played football, he couldn't play baseball. You can do anything, guys. Put your mind to it. And with Intel, there's no reason to hold this stock. I could see playing a shorter term trade back up to the middle of the channel. You've got to have a stop loss on this one. This company is going nowhere fast. I think they need to be firing executives. I think they need to be streamlining the business. I think they should get rid of the foundry business or spin it out, make it its own separate company. There's a reason why Nvidia and AMD only design the chips and then they call up TSM to fabricate the chips. That is because the foundry design model simply doesn't work. They're also going to have competitors to Intel in the future that are not going to want to work on their foundry business because Intel is working on competing chips. I don't see AMD calling up Intel. I don't see Nvidia calling up Intel. I don't see Apple calling up Intel because these companies actually compete in a lot of ways. I don't see them wanting to work with them in the future, particularly when TSM is not falling on its own sword. And in fact, that company's investment cycle is only beginning and they seem to continue to be thriving. Intel, I don't expect any turnaround anytime soon. You need drastic change. You need people fired. You need business segments spun out. You need the foundry business to be separated from the design business. And until that happens, I still wouldn't touch Intel. And if you've taken my advice on that, you've actually done very, very well. Hopefully you guys enjoyed today's video. Back again later today with the Fang Stock Recap Show. Until then, good luck with your investments.